Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we'll be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. First up, coming to the technical outlook regarding Nifty at the current juncture. So Nifty for the second consecutive week has traded in a narrow range. If we see, the index has traded in a range of just 269 points during the last week. This was the lowest weekly range since November 2023. It has ended the week on a flat note and formed an indecisive candle. Further, on the daily scale, since the last 9 trading sessions, the index is trading in a narrow range and formed indecisive candles. However, the sector rotation is helping the market sustain at higher levels. Last week, buying interest in banking and financial services blustered the markets over the first 2 trading sessions. Subsequently, the following 2 sessions, we had chemical, IT and metal providing support to the markets. This clearly indicates that sector rotation is playing a crucial role in maintaining the markets at elevated levels. Now coming to the crucial levels for the index. So going ahead, the zone of 23,300, 23,270 is likely to act as a strong support for the index as the short-term 13-day EMA is placed in this zone. As long as the index is trading about 23,270, it is likely to continue its northward journey and test the levels of 23,800 followed by 24,100 levels in the short term. While on the downside, any sustainable move below the levels of 23,270 will lead to profit booking in the index towards the mark of 23,000. Now coming to the update regarding Bank Nifty. So the banking benchmark index Bank Nifty has given a breakout of the rising channel on the weekly scale and marked a fresh all-time high. It has strongly outperformed the Nifty index in the last week. In addition, it has formed a sizable bullish candle on the breakout which adds strength to the breakout. If we see the ratio chart of Bank Nifty as compared to Nifty, it has formed a strong base near the lower trend line of the rising channel and witnessed a sharp upside. This clearly indicates that the banking space is likely to outperform frontline indices. Private bank space is likely to give major contribution as Nifty Private Bank Index has given a stage 2 cup pattern breakout on the daily scale. Going ahead for Bank Nifty, the zone of 51,000, 50,900 will act as the strong support for the index. As long as it is trading above this zone, it is likely to test the levels of 52,200 followed by 53,000 levels. While on the downside, if the index slips below the levels of 50,900, the zone of 50,400, 50,300 is likely to act as the next crucial support for the index. Now coming towards India VIX. So during the last week, the volatility index India VIX has consolidated in a range of 14.06 to 11.63 levels. However, it has ended the week at levels of 13.18 with a gain of nearly 3%. Currently, it is trading below its short-term and long-term moving averages. These averages are in a falling mode, which is a bearish sign. Further, the momentum indicators and oscillators are also supporting the overall bearish chart structure. The daily RSI is in a super bearish zone as per the RSI range shift rules. This clearly indicates that the overall market volatility has decreased significantly over the last couple of trading sessions, and going ahead, any sustainable move below the levels of 11.63 will lead to further selling pressure in India VIX. In that case, it is likely to test the levels of 9.90 in the short term. Now coming to the broader markets, we believe that Nifty Mid Cap 100 and Nifty Small Cap 100 indices are likely to continue their outperformance in the next few trading sessions. If we see the ratio chart of Nifty Mid Cap Index compared to Nifty, it has shown a consistent upward trend, forming a sequence of higher tops and higher bottoms, while the ratio chart of Nifty Small Cap 100 compared to Nifty has recently broken through a horizontal trend line. This clearly indicates that the mid and small cap sectors are outperforming the frontline indices. Talking about levels, Nifty Mid Cap 100, the zone of 54,700, 54,600 will act as the crucial support as the 8-day EMA is placed in that region. As long as it's trading above 54,600, it is likely to continue its northward journey and test 56,000 followed by 56,700 in the short term. For Nifty small cap index, the zone of 17,950 17,900 is likely to provide cushion in case of any immediate decline. While on the upside, any sustainable move above the levels of 18,400 will lead to a sharp upside rally up towards 18,700 followed by 19,000 in the short term. Now coming towards the sectors which are likely to outperform. So we have Nifty Private Bank, which has witnessed a stage 2 pattern breakout, cup pattern breakout on the weekly scale. Significant outperformance is seen in the frontline counters within the private bank, especially HDFC. A sizable bullish candle was formed during the breakout week, which adds strength to the breakout. Coming towards the rest of the sectors, so we also have metals, IT and railway counters which are likely to outperform in the short term. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.